What's going on, traders? Welcome back to my YouTube channel. I hope everybody's doing well and you've had a fantastic trading day today. So unfortunately I'm not on the camera because I'm rejigging my office and I'm going to be having a new setup very soon. So I've collapsed everything and I'll need to rebuild everything new again, so just bear with me. But I will be back on the camera. So I'm just going to go over the session with you today that I had with the RocksFX Academy members, our live trading session, and as you can see that I managed to finish the session plus 5R up. Now I'll talk a bit more about this towards the end, so you understand why this is 5R even with only 3 trades here and a 1-3 win. But let me just go through through the initial thought. So for London Open, what I was monitoring here is how the market was creating these higher highs and these higher low formations. So this is pre-London Open. Now usually what the idea is for pre-London Open is the market will either go bullish at London Open, it will then reverse bearish just for a short period of time, maybe 15-20 minutes, or the market will do that. If it's going bearish pre-London Open, will then reverse and go bullish. So I was looking and identifying at the structure that we were making higher highs and higher lows. Price then did eventually break a key level in the market, obviously confirming this uptrend here, and then London opened. Now with the London Open, as I said, if the market is bullish, we do suspect the market will then reverse for that London Open session, and it did exactly that. Now my trade idea was to see how this level was either respected or broken. Now because it's been a significant level in the market for a period of time, price has been failing to break this structure. My idea was to see price break this structure as a continuation of this bearish move for the London Open session, and then see this continue back down to some of these lows here. So I decided to wait for the break of this structure to confirm this bearish sentiment and then potentially get into a trade. And that's exactly what happened. Now, on reanalyzing this after the session with the community, I did see that there was a wick rejection here that I could have avoided setting my sell stop and being triggered into this prematurely. What I could have waited for was for one more bit of evidence, so just a single candle close to identify that the bears are still in control of this move to the downside. We're not breaking back into this key level and we are actually retesting and staying below it. That's exactly what did happen, but unfortunately I was triggered in early on this candle, which is just life. It is what it is, and you know, unfortunately I was stopped out. Now could I have taken this trade better? On this occasion I don't think I could have. Regardless, if I waited for this candle to close and then set my sell stop below this level, I still would have been triggered in, so that could never have been avoided. And what I don't want to do is take a good trade idea that I planned and waited very patiently for over an hour to then turn around and say this is a terrible trade. What I don't want to do is trigger emotions that will then cause me to do really silly things. Now, some of the members in the community saw that price broke back into this structure and actually took a breakout and a break back in and took this buy back to these highs, which was a great trade. One of the questions that was posed to me was, Rox, why didn't you take a breakout and a break back in after you saw price was failing? Well, what I want to do as a trader is I want to avoid stirring emotions unnecessarily. So if I see that the market has, or my trade that I've taken has not gone to plan, and I can see that the markets are pushing back to the upside and I've been stopped out, what I want to do is I want to just stay out of those markets altogether, period. I want to give myself a 15 minute break, maximum half an hour break, and then come back to the markets and reanalyze. So whether this was a pattern that's part of my trading plan or I even recognize, I'm not going to take it immediately after a loss. So I decided to stay out of this market. The markets then continued to push to the upside, and as you can see here, price came back to these key levels. Now this is a significant level in the market because look, price came into the middle of nowhere. You see a huge reaction from this level, and then price comes back into this level with really strong bullish sentiment and then automatically stalls. So at this stage I was considering taking a sell stop below this level. But I know that my trading plan says that I don't take double tops at key levels. I only take double tops if the markets are trending. So for that reason, I wasn't able to take this trade, so I stayed out. Now, my plan was, once price started to stall in and around this level, was to see how price could eventually break this key level here. This is significant. The markets are holding, the trend is up, this could be a higher low before we then see a new higher high. So for that reason, What I did is I waited patiently for the market to break this structure. Now the patterns that I trade, and you've probably all seen, are triple tops from key levels, because now with that in mind, or with a triple top forming, what I have in mind, should I say, is price showing signs of evidence and then price showing signs of confirmation of a new behavioral pattern, which I'll be focusing on the left, and then I will be disregarding the previous behavior on the right. So that's exactly what happened. I planned and waited for price to break this structural low. Then I said if price comes back to this level clearly to create this triple top, that's when I'm taking the trade. As you can see, I took this trade and the market did push down back into a significant level here, where you can see we started to form these wick rejections. Once we got these wick rejections, I did actually in fact go break even. To be honest with you, if I didn't go break even, the trade would have never hit stop loss, and eventually I would have hit this 1 to 5 target that I was going for. But for me, it's risk before reward. I want to go break even, especially when I'm getting the signs that price is failing to make new lows. And unfortunately, I was tagged out break even before the market continued to rally down. Then obviously we've taken a loss now and a break-even trade, and we're just waiting patiently now for one more setup. I was very sure that the markets were going to continue to push down simply because of this reaction area here in the market. As you can see, the markets was not making new highs off of the back of this uptrend, and my plan was this, that as long as price was able to show sell pressure, break and close below the structure once again, I was going in for this trade. And as you can clearly see, this is exactly what happened. I planned my trade and I traded my plan. The markets did in fact break close below strong enough, stronger than we did see the sentiment before. We had the indecision candles, and then guess what? This market continued to rally down, and in fact hit our 1 to 3 risk to reward ratio trade. So in theory, this was a plus 2R session because of the previous loss, but in actual fact something happened and I was fortunate enough to finish this session 5R. But regardless, just to put things into perspective, look at the duration that I took my first loss, then taking my second trade was a long period of time. I had enough time to regather myself, regain my thoughts, take control of my emotions, and then entered my second trade. Yes, we took a break even. It would have won if we didn't put our stop loss to break even. More emotions could have been triggered there, but guess what? We're not in this business to be right every single time. As I always say to my students, as a trader, if for 12 years of the month or 12 months of the year, you're 70 or 30% right and 70% wrong, using a 1 to 3 risk reward ratio trade, you are going to be making money, and I'm talking a lot of money. So if we're wrong here and we lose, guess what? It doesn't necessarily mean we're wrong, it just means we lost. If we take a break even here and we could have maintained this trade with our stop loss above structure as we did have it, we need to disregard those thoughts of woulda, coulda, shoulda, accept the break even as we go for risk before reward. And then guess what? We're rewarded for our patience and our discipline and our systematic approach. And look, absolutely gorgeous trade. We did expect the markets to get back to these levels, which they did, and if the markets did finally break these structures back down to some of these lows, which they did. For the majority of traders, you probably can see here, they took exactly the same trade, and for the majority of us, we did go for a 1 to 3 risk to reward ratio trade. And in all honesty, guys and ladies, this is all that's needed, just to be consistent daily, make your money, get out the markets, come back tomorrow. You don't want to be fixated, as a trader, your goals and your aspirations or whatever it is you desire will come in the future. For now, majority of traders' whys are the fact that they want to own their time, they want to get out of their 9 to 5, they want to be in control. Once you make your money, just get out and leave. Trade management wise on this trade anyway, just to finalize this short video, was once price started to push down, this bearish close had happened and I trailed my stop loss to 1R, making sure that if price did come back at this stage, I would have finished my session break even with a 1R win, a minus 1R loss. So I would have finished break even. That would have been a very, very epic session. And the idea was trailing aggressively like this simply meant that I believed in the momentum shift. lift. I believe that price was going to get back down to these key levels, and in theory price should not pull back to stop me out. It should continue down, and as you can clearly see, it absolutely smashed through take profit eventually. But the reason for the 5R was this. I use a trading panel, the RoxFX trading panel, to manage my trades, to be able to set my break-even to break-even targets, partial profits, close trades, close positions, etc., etc. This is not on the market, so this is not me trying to sell this to you, but I'm just letting you know that's what it does. And when you open and close the panel, it automatically defaults back to what you set it as, and I set my risk usually to X amount, but for the month of December my plan was to actually risk half of that amount, because I've had an absolutely epic year, and I don't plan to go out of this year on a downer, even though it's very unlikely that I'm going to lose a lot of money using the risk that I'm using and the gains that I have gained this year. I say that very humbly. I just didn't want to be using full risk. So what happened is I'd closed the panel, reinstalled the panel onto my charts, and unfortunately the default risk came back on as the risk percentage. So instead of risking this at half of what I usually risk, I risked it at the full of what I usually risk. And yes, that meant that this trade was a 1-to-3 risk reward ratio winner, but in actual fact it was a 1-to-6 based on the risk. So I'm -1R with a 6R profit off of this trade, and that leaves me at 5R for the day. So hopefully that was useful to you. Don't focus on the wins, just focus on the process. The wins will come, traders, believe me, they will come. But I hope you found some use of this video. I hope you've been inspired, and I hope you have an absolute fantastic December. Remember, stay patient, remain disciplined, and continue to trust the process. As I always say, if you've enjoyed this video, smash that like button, subscribe if you haven't, turn on notifications, and until next time, take care for now.